In this session we're going to look at car benefits. So a company car benefit will arise if a car is made available to an employee or a member of their family or household, and the car is made available by reason of the employment, and the car can be used by the employee for their own private use, and it's worth knowing that their private use would include travel from home to work. So what sort of things will affect the amount of the benefit? Well, first of all, the list price of the car, also the CO2 emissions of the vehicle, the type of fuel that's used by the car, and whether there are any periods during the tax year when the car was not available. We will also take into account any contributions that are made by the employee to the employer for their private use of the car. So we'll start with the price of the car. Now here we take the list price of the car when it was new. So we don't use the cost or the value of the car at the start of the tax year. It's always the list price when it was new. To that we would add the cost of any accessories that were provided with the car. So there we might have selected metallic paint, we might have gone for alloy wheels and so on, all of which would be added on to the list price when new. If it is the case that once the car is purchased, then accessories are then added to the car, then we would add just the items that cost more than £100. Sometimes when company cars are given to employees for their own personal use, the employee might make a capital contribution towards the cost of purchasing the car. This can occur when the employee, for instance, wants a more expensive model. In this situation, we will deduct that capital contribution from the price of the car, but only up to a maximum of £5,000. So we'll have an illustration. So in 2016-17, Michael had the private use of a company car. Its list price was £36,000. Accessories added were worth £1,000, and Michael had made a contribution towards the cost of the car of £8,000. So the price of the car for the purpose of calculating the car benefit is the list price of £36,000, the accessories of £1,000, and from that we would deduct £5,000. Although Michael made a contribution of £8,000 to the cost of the car, that has to be restricted to £5,000. So the overall price of the car for the purpose of calculating the car benefit will be £32,000. Next we'll look at how we calculate the benefit. Well, what we do is we take the price of the car that we've just calculated and we multiply it by the relevant percentage, sometimes referred to as the scale charge. Now this percentage is based on the CO2 emissions of the car, and also whether we're dealing with a petrol engine or a diesel engine. For diesel engines, we have to add an additional 3% charge up to the maximum percentage for both petrol and diesel of 37%. Now, on screen at the moment there is a table showing how we calculate the car benefit percentage, and you will be given this table in any assessment. So we can see that for 0 grams per kilometre to 50 grams per kilometre of CO2 emissions, the relevant percentage is 7%, and so on. For electric vehicles, those that would put out no CO2 emissions, we just have a single rate of 7%. So let's have a look at an illustration. So in 2016-17, Michaela had a company car. Its list price was $30,000, and it's a diesel with CO2 emissions of 123 grams per kilometre. So we need to calculate the relevant percentage. In order to do this, we take the car's CO2 emissions and deduct 95. So that gives us 28. We'll then divide that 28 by 5 and round down to the nearest number. So that gives us 5. We then add that 5 to the 16%, which is relevant for cars with CO2 emissions of 95 grams per kilometre, and that gives us a relevant percentage of 21%. Because this is a diesel, we would then have to add a 3% diesel surcharge. So that takes us to a relevant percentage of 24%, which would then be applied to that list price for tax purposes of £30,000. So our car benefit will be 30,000 times 24%, or £7,200. Now when we have a car, sometimes company cars are not available for use by the employee at different points over the year. Well, if it's unavailable for 30 or more consecutive days, then the benefit will be reduced. So we'll time apportion the overall benefit for the year for the period where it was available. But we ignore periods of less than 30 days. We normally, in practice, calculate this on a daily basis, but in an assessment, do it on a monthly basis unless told otherwise. So let's have a look at an illustration of this. So Misha is given a company car as part of his employment. The car benefit for the whole of 2016-17 would be $5,280, but the car was unavailable for 2 months of the year. And let's say that those was consecutive 2 months. So the car benefit would be 5,280 multiplied by 10/12 to take account of those 2 months that were not available. So that gives us a car benefit for the year of £4,400. Next, we can start thinking about when company cars are received or withdrawn or changed partway through the tax year. Well, where this happens, where a vehicle is received by an employee or withdrawn from their use partway through a tax year, what we do is we calculate the benefit for the whole year and then we time apportion it so that they only receive the benefit for the period when the car was available. Similarly, when an employee's company car is changed partway through a tax year, what we do is we calculate the benefit for the first car up to the date of the change, and then we calculate the benefit from that date up to the end of the tax year. So we calculate 2 lots of benefits, but overall the employee will receive a car benefit for a year just in total. Lastly, an employee might make payments to the employer each period towards the cost of this private use. Where this happens, those contributions are deducted from the car benefit that are assessable on the employee. So let's have a look at an illustration. So Michelle has a company car with a list price of $10,000. We've got a petrol engine with CO2 emissions of 96 grams per kilometre, and she contributes £100 per month for the personal use or private use of this company car. So first we'll calculate the car benefit. That's £10,000 multiplied by the appropriate percentage or the relevant percentage, which works out at 16%. So she would incur a benefit of 1,600. We would then deduct the contributions that she's made over the year. That's 12 months at £100 per month, or 1,200 in total. So her car benefit for 2016-17 will be £400.